Okay. Can anyone confirm if they could see my screen, please? Thank you. The thumbs up will
Yeah,
be
I can see your
okay,
screen. I can hear
especially
you.
from our point of view. Thank you very much. Thank you very much for that. I really appreciate it. Okay, so today we'll be going ahead quickly with the webinar. We had mentioned earlier, if you are joined us on our TVC, small chats about how we're going to be discussing it about affordability and affordable housing, and the context of today, how exactly we can define affordable housing. But we won't be doing it alone, as usual. We won't be doing our webinar alone. We have partners here with us, and we'll be introducing them very soon on next slides. Before we introduce our partners, we'll be looking at the topic affordable housing, bridging the gap between demand and supply. Pardon me. But first off, I want to introduce who we are Mixta Africa, and by virtue, Duo by Mixta, a rent-to-own scheme that was developed by the first developer in Africa. We have over, say, 20 years experience and more, 25 years experience in real estate. We are cut across different countries where we are operational, 5 major operational countries, if you see. One of our initiative that is currently ongoing is the Duo by Mixta, which speaks basically affordable segments of housing. Remember, when we talk about housing, some people put it as a long-term plan because it's usually has to do with capital intensiveness or something, money before you get property. To me, I would say that if you want to get a premium housing, so to speak, but there are different measures that have been brought into play, the likes of mortgages, the likes of different policies, PPPs, and the rest that have allowed housing to be much more affordable. And that's where we come in, Duo by Mixta. It's a rent-to-own scheme that allows you to rent your house, and us in coming slides. But as I mentioned, we'll be discussing with Buy, Let, Leave, and they'll be giving us analytical reviews around our topic of today. Buy, Let, Leave is a Nigerian protech company that delivers research and analytics around the real estate landscape. And with us today are 2 particular guests, but I would not disclose their names yet. Just to give you another context again about affordability. Remember I mentioned that when you're speaking to affordable, if you go to a market and say, oh, I want something affordable, in your minds, you're saying, oh, I want something cheap. But given the context of today's economy, is that actually correct? That's what we'll be looking at. We'll be looking at how government-supported housing projects, how pension access, how the rent-to-own scheme, how mortgages can actually help us to understand or to bridge the gap between the demand and the supply side of housing. Yes, these are our guest speakers. As I mentioned, you're from Buy, Let, Leave. On my, I don't know where your screen is actually viewing, but on my left, yes, I have Modupe Agbolaon, who is the CCO of Buy, Let, Leave Nigeria. She has experience spanning different analytics, and she has given discussions basically around the rent-to-own scheme various times. She has also given discussions about the analytics of Lagos housing and how important it is for people to have ease of access into the housing metrics. She is instrumental to market research and market risk. She has inputs into the Castle Lifestyle magazine, the monthly or periodic inputs, and her network is now. On my right, on the other hand, is Esther Oyemikon, is analyst. She's very instrumental into their reporting, into their H1 in reporting and analytics around the Lagos in itself, where we'll be talking about how data comes to play and housing under different metrics. My expertise spans around data collection, cleaning of models, validations, and the likes. And we will be hearing her voice next, as she'll be bringing to us the summary of the data of the H1 report that was disclosed to the public earlier this year. Yes, and I welcome you again to the session of Bindi Shodipo. Pardon me, Uyemi was my former name. Bindi Shodipo, and I'm a finance professional. I would enjoy you to actually wait till the end of the session so that you could get your inputs and also learn more about the dual rent to own scheme. Yes. Over to you, Esther. Thank you.
Uh, Thank you. Thank you so much. Please confirm you can hear me.
Yes, we can hear you, Esther.
All right, thank you. Good afternoon, everyone. Good evening.
Yes, yes, I
Forever you're
can.
joining us from. Um, Thank you, everyone. My name is Esther Yenekon from Violet Leaf. So I'll just be speaking shortly on our Lagos Residential Occupier Report. This was a report that we did, gathering survey from thousands of people in Lagos State, people staying in Lagos State, that we got their data on how the real estate is, the people, the tenants and landlords and investors, for us to know, okay, where next. Shortly we'll be dropping the link to the report for you online, for you to see. Thank you, Doing, for projecting this. We can all see this one of the summary from the reports that we did. So this report says that almost 98%, about 98% of people stays in a rented space. That is the people that actually we surveyed, 98% of them are staying in a rented space, and we can see that also 29% of them actually prefer to actually own a home through the mortgage plan system. It's because we all know that to get a right to build a house it's a big thing, it's a big deal. It's not something that low income or middle income earner can actually really do with the way the economy is today. And also, from that same report, we saw that 80% of them actually even prefer rent to home. Like they would rather put out money every month for them to finally end up owning a home in the future. And 43% of them actually wants to stay in a two-bedroom apartment. This is because everybody is looking at being a owning a family in the nearest future. So this is the summary from our report. The link will be shared with us shortly for us to like download, digest it, see how broad it is. This is a very big report that actually helps some investors, even some developers, to know what next to do. What area should they consider building? What area should they consider? What type of apartment should they consider going for? Because this is based on what people actually really want, and we see that a lot of people want mortgage plan, and some people actually even want the rent to own scheme as well. Thank you, Doing. So this is just a short summary from the report. We'll be speaking more to it as we go deeper in the webinar.
Thank you very much. Thank you very much, Esther. And yes, you've heard it from the horse's mouth about the analytics of how people desire to own their homes, which is quite key. Owning a home or a roof under your head is known as a basic nature to man. And now it's already even clear that 98% of people actually rent homes in Lagos.
Hi, Boyde. Sorry, we lost you for a bit. Esther, please, can you hear me?
Yes, I can hear you more.
Okay, I guess maybe there's a network glitch.
Yes.
Sorry everyone for the break. I think there's a network issue which will be resolved very soon.
Apologies, please. Like I got thrown out of the Zoom call. Please, I apologize about that. Just quickly. Sure. Sorry. I guess my network is shaky. Please, could you confirm if you could see my slides?
Yes, we can.
Yes.
Welcome back.
Thank you. So sorry. So sorry about that. I wonder why network is behaving funny. Okay. So we'll be going quickly to the next phase of the product offering and, talking basically about the affordable housing and bridging the gap and, the rest. So now, first off, I would like to actually start with Mudupe, where I'll be asking a key question on the definition of affordable housing. Given your experience, given how much you have, delved into affordability in Lagos itself and maybe even in Nigeria, how would you define affordable housing in Nigeria context, taking into consideration critical factors affecting affordability?
Thank you, Boinde. Again, thank you for having us, myself and Esther. Thank you for this wonderful platform. So typically, affordable housing can be, in the Nigerian context, can be viewed as housing accessible to the low and middle income earners in Nigeria, not costing more than 30% of their monthly income, right? So what are the factors that is not allowing this middle sector, low sector income earners in the country not gaining access to affordable housing? I think that because by Let Live, right, we are an online platform that relates with key stakeholders in the real estate sector. So in terms of demand and supply, of course, when we say demand, we're talking about developers like yourself and other developers that are actually, building and ensuring that houses are, in demand, and then in supply rather. And then demand is talking about potential homeowners, people that want to rent, that we've seen in the, summary of the reports that Esther talked about earlier. So on the supply side, I would say that one of the factors affecting affordable housing will be land availability and cost, right? In urban areas, in prominent areas where houses, should be made affordable for everyone, you find out that the land prices are very high, right? So, and then you now see developers like yourself opting for joint ventures. So you see a family that owns a land, and then the developer comes on board to collaborate with these landowners and build. So they come with the funds to build, and then landowners come with the land. And then you still find out that with that, the JV agreement is still not as, how will I say it now? It's not as favorable for the housing to be affordable, right? Not to even talk about the inflation. Because if you look at the total cost of building houses now, let's even set aside the cost and the availability of land. When you now talk about building materials and how much inflation is hitting hard on the costs with the way foreign exchange has, skyrocketed these days, you find out that when a developer or home builder looks at all of this, making homes affordable for low and middle income earners is almost not impossible, right? So, and that's on the side of the supply. When it comes to demand, right, for affordable housing in Nigeria, one of the critical factors, there are lots of them, so I'll just touch on income levels because of our time, right? So we all know what the minimum wage is saying right now, right? We know that when we compare what the minimum wage for an income for a middle earning and a low earning, wage earner in Nigeria, it doesn't even commensurate with what houses are going for now. So in terms of demand and supply, we can weigh all these factors and see the critical reasons why, housing is there, but it's not as affordable and accessible for Nigerians as it should be, or as it were.
Thank you so much. Thank you so much for the clarity on that. And yes, most people will say that, yes, affordability is now key or even prioritized, let me put it that way, because most people, once they get their disposable income now, it is quite tight. So the priority even now defines the affordability more strictly or more in-depthly. So just on that same thought, I would just be asking you a slightly close question. So if you just shed more light on this, please. Based on critical factors affecting affordability today, is it reasonable to actually then define affordability using price as the major matrix?
Okay, I think I'm unmuted. So, yes, price is a metrics, but it's not the only major metrics, right? So, I mean, you want to buy something, you're thinking naira and kobo, so we're saying price, but there are a lot of other factors. We can liken it to quality of life, right? You have a house, for instance, I'll make a critical example. One of my colleagues, he lives in Ikorodu because houses are affordable in Ikorodu, but then our office is in Lekki. So the house is affordable, the price is right, so to speak. When we are saying price is the factor. But then look at the cost of transportation all the way from Ikorodu with the price in fuel now, right? The price, the cost of transportation from Ikorodu to Lekki, is the house still affordable? So quality of life, the kind of amenities that are in that Ikorodu. Do you have good hospitals? Do you have schools? Do you understand? Yes, the house is well priced, but what is the quality of life? All of these things will amount to how we look at affordable housing. So the first one I was talking about, the location, about the Ikorodu, that's location and accessibility. A cheaper house located in Ikorodu, of course, is okay. You can afford it. But when you look at transportation, it now, okay, why don't I just add all this money and live in Lekki phase 1? Or live in Aja and be closer to my workplace? And then quality of life, the kind of basic amenities also, you know, are factors that we need to put together, you know, to look at affordability. My house is cheap, but I have to come to town, get a good hospital. My children have to come to the island to get good schools. We need to go all the way and pay so much transportation to ensure that we have good quality of life. So quality of life, location, and accessibility, they are also major factors aside from pricing.
Thank you so much. I actually like that when you put it in context of quality of life. The quality of life is actually essential so that you have long life. Good life equals to, you know, how you take care of yourself.
Penny wise, pound foolish.
True, exactly. Thank you so much, Modupe. Okay, so over to you, Esther. I'll be asking the next question. It says, what is the primary challenge faced by low-income earner? And so you know how Modupe has mentioned how most people go to deep down to just find the cheapest, but is that actually essential? So I want you to touch on this particular question. What is the primary challenge faced by low-income earners in accessing affordable housing in Nigeria? And what are the obstacles hindering supply of affordable housing in Nigeria as well?
Okay. I believe this question is in two parts. It's speaking to the demand side, those are the low income earners, and also the supply side. That is the developers, like Mr. Africa. So I'll talk about the demand side first. From our report, we'll see that like 31% of people are actually earning between 100K to 300,000 naira. So first thing, I'll talk about their limited access to credit, because we can believe that with this amount, earning 100K, that might be a low cost credit, because if you go to the bank wants to know what do you earn in a month, like for them to know that, okay, you'll be able to repay back the loan or any credits you are taking out from the finance company. And also, even if you have access to these credits, we have to talk about the high interest rates. The interest rates from these finance homes is really high. Sometimes it's spanning over 20%. With that, most people cannot even afford to even take a loan or even take a credit to finance to finance how to get their dream home. And this is really one of the challenge that low income or middle earner are really facing when it comes to accessing affordable housing. Also, I'll talk about the mortgage system. Not everyone really have knowledge about the mortgage system and how it works in Nigeria, because it's a bit rigid, and like I said, your income needs to be like even more than 300K or so in a month for you to be able to access that, because you need to like put 8% for you to pay upfront, and sometimes this money to pay upfront might even be entry 10 million, 5 million for you to pay upfront. So that is another challenge the low income earner face. So now speaking to the supply side, that is the developers that actually even giving building these affordable houses. I want to talk about the high construction rate, the high cost of construction. We all know that things, the way the economy is right now, the inflation rate is really eating everyone. The FX cost for them to bring in things from outside Nigeria to build the homes to make it affordable for all of us. The interest rate is really, really high. It's really, I think the last one that came out is like the interest rate is even over 30% right now from the CBN. So this is another thing that the suppliers, the home developers actually really face. It's not easy for them to build the affordable home due to the high cost of building materials. Also, to acquire land, we all know how expensive it is. If you want to get the land in even in Lekki Phase 1, places that are actually close to the city, except you want to go to like far away places like Ekwe and all. So it is really hard for them to get through the bureaucratic system to get COO, get governor's consent and every other thing that they need to like acquire this land for them to even now start building. That was why Modupe was talking about the JV. Most people now have to start working together with Omonile to do a JV, a joint venture. For those who don't know what JV means, a joint venture where someone owns the land and another person is bringing in the money for them to build this house. At the end of the day, when they come together to think about all the costs, everyone wants to make a gain at the end of the day. So this might actually impact the price of the homes, which might not make it affordable for the low income earners.
Thank you so much. Thank you so much, Esther, for that detail, which is quite true. But you have already even shown pointers at which people can do partnership through JVs, through PPP in government and the rest. So yes, I enjoyed how you mentioned the point of what affects a low-income earner at the end of the day, which should be taken into consideration basically. So I'm moving now over to Modupe for the next question. So my question, Modupe, please, can you confirm if you're online? Okay, I don't know if I could see her.
Oh, yes, I'm here, please. Sorry, I
Oh,
was
okay,
muted for a
okay.
bit.
Okay,
Yes,
that's
please.
fine. Okay, so please, I hope our viewers and our audience are actually listening. If you have questions, please drop your questions on the Q&A section of this particular Zoom webinar. The next question for you, Modupe, is based on an assessment of effectiveness of the current regulatory policies, given the former NHF scheme by the Federal Mortgage Bank in promoting affordable housing, what collaborative efforts would you say have not been explored by governments or even by private sectors or by civil societies to bridge the demand and supply gap?
Yeah, sorry. So I think there can be a lot of PPP, public-private partnerships, that has not really been explored. I think they've done something like that in South Africa, and they have a lot of affordable housing where the public sector, private sector, everybody comes together. We know that when it comes to accessibility around land, of course, government has a lot of influence around that. When it comes to reclamations, when it comes to providing and ensuring that there is access to lands where there are stopgaps where developers cannot really have this full access. So when the private sectors, the governments, regulatory bodies, and even tech companies like ourselves, because the world has gone digital, right? There's a lot of things that can be replicated via technology or through the use of technology. And that's what our platform BioLetLive stands for. So there are a lot of things that could be done, but a lot of it, has to do with collaboration. We all have the same goal. We want houses to be affordable. But we can get there faster when we collaborate among ourselves. There are a lot of community-led initiatives as well, like cooperatives that can also help. I see a lot of, corporates, like the Shells and all of them having cooperatives that works within their sectors, like their workspace and for their employees. But if we have more communities amongst our neighborhoods coming up with these cooperatives in collaboration, of course, with developers, the government, it will work and it will help us have more access to affordable housing. So I believe strongly that with collaboration with both the private sector, the public sector, among communities, a lot more can be achieved and houses can be a lot more affordable. Also, incentives for developers. These developers, I mean, like yourself, a lot of hurdles, even to get approvals, a lot of things, can be seamless. They can be a lot better to ensure that, of course, for every approval, for every documentation, it has to do with funds. So if most of these costs are being alienated, or the total cost of building, the total cost of, each housing unit, which will now ensure that houses will be more affordable.
Thank you. Thank you so much, Modupe. And one key point you mentioned was collaboration. If only we could, work together to achieve that particular height of collaboration, it would be easier for most people to own homes. And that percentage, 98.5, the rental percentage in Lagos would most likely reduce, all to the benefit of the state itself. Okay, so to our next question, that's for Esther. Says, what immediate actions can stakeholders, that's the buyers, the sellers, from the buying and the selling angle, take to address affordable housing crisis in Nigeria or even in Lagos State? Let's start from there, then we go to Nigeria.
Okay. I think one of the immediate actions stakeholders can actually take is to look into what Duo is currently doing, the rent-to-own scheme. This is going to really help everyone, because we all know that the low income earners, they don't have the big sum of money to drop at once for them to get to own a home. So the rent-to-own scheme is a great one. Like I said earlier, from our report, we have like about 80% of people that are actually looking to actually own a home through this scheme, rent to home. So and this is a scheme that's actually successful in other countries. And also it has its own benefits because it is accessible, it is affordable at the end of the day, which is what we are actually talking about here. It is affordable because buyers can actually pay over time, which actually reduce the burden of full upfront payments. And also it's actually for equity growth, because while you are renting your home, at the end, you are going to take over the home while also staying there. Sometimes you can even just get the space and even like sublet it out in case it's not a place where you can actually stay. Maybe you are staying in another state like Ibadan and you see an opportunity to get a home that is rent to home in Lagos State. You can actually like put in the plan and get someone staying there while you're collecting rent from that person and even using it to pay back the people that you actually got the houses from. And also we'll talk about policy reform and some of the old laws, the old rules that we have. If the government, because we actually need the government to actually come in here for them to do some of our policies, we get them reformed to make it easier for the suppliers, the developers to like build a better and affordable home for all of us. And also if we can get an increased fund for mortgage plan. And in our report, you see that we actually stated that at a point, the government actually increased the mortgage home from 15 million naira to 50 million naira, from 15 million to 50 million naira. And if you can actually get more policy like this will help everyone that wants to actually own a home through the mortgage system, which like about 29% of people are actually looking into, apart from the rent to home scheme. So these are one of the ways that the stakeholders can actually take action from by partnering with the government and the finance, the people that we finance the housing can actually look into the. So I've spoken about the rent to home scheme, the mortgage plan, the money put into mortgage plan by the federal government being increased, and also the policy from the government being reformed as well. I believe this will help get a more affordable housing.
Yes, very well said, Esther. I like how you put it there that doing what, say, Duo by Mixta does, that's the rent to own, making ease of entry, which is key. And secondly, as you mentioned, the reforms of policy, the extension from 5 million access of mortgage to 50 million access. I really align with how you positioned it. And even if more of those reforms can be introduced by government, it will then make that gap to come closer and closer. I will allow you to speak more on your reports, how well you review the reports, what periods you bring it up, and what exactly are the insights we should be getting from the report from Buy Let Live.
Okay, thank you so much, Boy. So from our report, we usually do 2 reports in a year. We do our half-year report, which usually come out by the end of June, and we do an annual report, which speaks about what the real estate industry has been in Nigeria from January to December. So that is more broad than the half-year report. Most of the numbers that we are quoting right here is from the half-year report. For our half-year report, we go out, speak to people, create a form, ask everyone to fill. From there, we get the numbers, because we all know that data is the big deal right now. For you to make any decision, you actually need data to back it up. So from here, we get data from people that actually looking to own a home. From there, we got to see that, okay, 29% of people actually want a mortgage plan, 80% of them want to rent home. From this, even developers that are building home, that actually usually want a full outright purchase, they get there to see that, okay, more people are looking into rent home. Okay, how can I start developing houses that can, from rent, people can start owning it to make housing more affordable. Also, we look at location preference also of people. Where do people really want to stay? This also will help our developers when constructing homes for us, the low to middle income earners. And also for our for our annual report, we look into through the agent's view, the tenant's view, the landlords, the investors, all the all stakeholders in the industry. We take them into consideration. So this is a report that is for everyone that have anything to do with real estate, because we all know that rights is actually a big deal. If you want to actually acquire wealth, most of the time it's through real estate, because it's something that actually appreciates over time, and sometimes there's not even any risk involved. It's just by your mind, because the land you bought for 5 million today can be like 20 million tomorrow.
Exactly.
While
Yeah.
sometimes if you buy a stock can crash and all that. So this is what this report is all about, like to help all of us make informed decisions. Thank you, Bill.
Thank you. Thank you very much, Esther. See, I was nodding my head like a gamma lizard because she was just hitting everything, every note, and it's true. Because indeed, the land you buy today that is 5 million can be worth, say, 50 million in the next 5 to 10 years, which is quite exactly what it is. While stock markets can crash, the real estate market would not crash for any reason. And definitely not the real estate market in Lagos, which is a metropolitan city that keeps on expanding and expanding. So I would encourage all of us to look again into the chat box or even the Q&A session to see the full H1 report, and also follow Buy Let Live on their different platforms to have access to their annual reports as well. Thank you very much, Esther. Thank you, Modupe. So I'll be moving now quickly to what our product offering is, what we actually want to discuss with you on the second session of this particular webinar. And I'll be handing over to my colleague, Glory, that will be putting us through the solutions and the product offering of today, the Duo by Make Start Rent to Own Scheme. Thank you. Hi, Glory. Just 1 minute, please. I think the network is acting up. Okay. For some reason, I don't know, Glory is, can you confirm that you can hear me, anyone?
We can hear you, Boinde.
Oh, okay,
Yes,
great.
I can hear you.
Okay, so I think Glory is kind of having some issues with her network. So I'll just go ahead with the presentation. So basically, it's about the solutions that we're trying to offer. That's the rent to own scheme. Yes. Okay, so the rent to own scheme. Oh, did I hear I'm back? Glory, is that you? Okay, sorry. Probably my ears is
Yes,
playing with me.
please. I add okay. Sorry, the network went off a bit. I didn't quite get that. Okay, thank you. So let me just continue from here. Thank you all for joining and for listening. Please, I want to confirm if you can see any link in the chat box, the link to the H1 residential report. Please just confirm the thumb up or something. We want to be sure that you can see the link in the chat box. Anyone? All right, thank you. So let me continue quickly because of our time. We've been talking about affordable housing, and when you hear affordable, the first thing that comes to mind is cheap, right? So we're trying to set that that notion straight, that affordable does not really have to be cheap. There are other parameters um, that leads to something being affordable. So now we're talking about the solution, affordable housing. There's a report that says 1 out of 4 people is included in the 28 million housing deficit challenge faced by Nigeria currently. If you live in Lagos, you will agree with me that there is housing deficit, either on the mainland or on the island. Getting a house, the hassle, agent issue, and you know how it is. I don't want to go into that. How you want to get a house, and for like 3 months, you can be roaming about the street of Lagos and not get what you want. And even if you do, the house might be very, very small, the space and everything. So we're talking about this housing deficit. What is the solution we are preferring? Now, talking about affordability, we have the mortgage offering, we have the payment plan, we have the dual rent to own. Let me talk about the affordable offering. Number one, the good thing is there's good interest rates. And you know that considering the MPR rate now, if you go to the bank to borrow money, you know that you're paying a lot in interest. You can just try it, just walk into any bank. And the interest you are giving is very, very, very fair. Talking about this, the affordable mortgage, we have tenure up to 20 years. To be able to assess this, you have to be 18 years and above. Then what is required for this mortgage is 20% equity contribution. That's the 20% of the property value. If the property is 100 million, for example, what is required is 20 million equity contribution. Then talking about the equity spread, you can spread over the equity for a period of time to ease the burden of paying heavily at once. Then let's talk about the
Gloria, are you there? Network in Lagos is showing us shaggy. Okay, Gloria.
Can you hear me, please?
Yes, we can hear you now. You tripped off for a while, but please go
Oh,
ahead.
so sorry. Okay. So talking about, let me go straight to the payment plan. So you can use your RSA, because right now, you know that if you are a pension contributor, you can access 20% of your RSA to access mortgage. Then we're talking about the dual rent to own. This one is it's quite juicy. The ease of entry, it has lowered the entry barrier to real estate. What you just need to pay is 5% of the property value. There's a fixed annual rent. Then there's if you are a resident or an investor, it's a win-win for both. Then there's long payment spread with a mortgage exit option. There's something called option sum, which we're going to talk about later, and how to access that. Next slide, please. Next, okay. So now these are the dual offerings. So there's something we came about, we called it dual variant. Dual itself, it's a model that is a home ownership model that allows either you are you're a business owner or you work in 9 to 5. It allows you ease to earn a home through the rent to own scheme. Every rent you pay is towards the home ownership. You are expected to pay a minimum equity of 5%, maximum of 25%. You pay a fixed annual rent, and at the end of the rental period, you exercise the option to purchase the home. That's at the simple model. So we have the dual classic, is what I just explained. Then we have the dual variant. If you are going through the dual variant route, you need to pay the equity contribution of 20%, not 5%. And we came up and say, oh, let's make this easy for our subscribers. We understand the terrain, we understand the economic situation of the country. That 20% might be a bit bulk for an affordable, for someone like me that is not earning maybe like 5 million per month, or I'm not in the C-suite executive yet, but I have the money saved up somewhere and I can afford like maybe a particular amount every month. So we came up with this variant, the dual active, the dual extra, and the dual bounty. So the 20% equity required will be spread over 12 months. for the Duo Active. For Extra, it will be spread over 15 months, and for Bounty, will be spread over 18 months. Just note that regardless of the Duo product you're subscribing for, either the classic or the variant, the equity deposit, the rent, and any lump sum paid during that period will be prorated from the property value. So what you are paying will be a prorated amount of the equity deposit, the rent, and the lump sum. That is what is called the option sum. Next slide, please. So now we're talking about affordable housing, and the property we are talking about. How does it look like? Like you have it in your mind. What are you talking about? What is this? So let's have a short visual 3D video of the property we're talking about. Okay, thank you very much. So from that short video, you can see that these are blocks of flats in a mini estate, in a community. So the product we're talking about for under this dual rent to own is a 1 and 2 bedroom apartments, ground plus 3, ground plus 3, lovely 1 and 2 bedroom apartment, fully serviced in an estate with green areas and amenities, security, 24 hours power, and modern amenities. So now let me talk about the investment proposition. Why should you buy into this particular product we're talking about? If you look at this data was taken in 2021. Yes, so this is from 2017 to 2021. If you look at the data from Old Ikoyi, the way property appreciated was 26%. Look at Lekki Phase 1, it's quite high, 130. Look at Victoria Island, 28%. Look at Shongo Tedo, 62%. Between 2017 to 2021, look at the return on investment. Abraham Adesoya, 47, Magodo, Ikeja. Then look at LNT. LNT is Lagos New Town, which houses the Lakwell Lakes Golf and Country Estate and the Marula Park. It's a community. You must have heard about the Lakwell Lakes Golf and Country Estate. It's a very, very beautiful place to visit. I wanted to find time to go there. Now look at the appreciation, 189%. I know someone that bought a particular bungalow in 2020. 2020, yes, for 16 million. And now that particular property is going for 85 million. So I don't know if you put 16 million in money market or any other investment in 2020 and you can get something million. If you have that kind of investment, please let me know. Real estate is still what sells, is real, and anytime, any day, you're going to get your return on investment. So this is a value proposition. Lagos New Town, that is where, that is the happening place right now. Next slide, please. Now let's talk about the pricing quickly. We've been talking about affordable housing, why we should buy Duo 1 and 2 bedroom apartments, Marula Park, and all. This is the pricing. So the 1 bedroom, the total floor area is 43.27 square meters, and the 2 bedroom is 72. If you look at this pricing, the entry price as of today is 37.5 million. The prices are not stable because you won't want to deny how everything is going up in Nigeria. Even bread is no longer 1,000, bread is 1,500. That's on the mainland. On the island, I don't know. So construction materials are going up every day. The 2-bedroom is 59.9 million. Today, if you want to key in with the equity contribution of 5%, you are paying 1,876,000 naira. For the 2-bed, we are paying about 3 million, 2,999,000. Now, let's talk about the annual rent. When you pay your equity contribution, then there's an annual rental of 1,595,000 every year. Let me explain. We have an 18-month window of construction. Mixta builds, you pay your 5% now, give Mixta 18-month construction window to build. At the end, you pay your first year rental. If you're exercising the option to buy at year 1, you pay your option sum. For the 1-bed, you're paying 38.7 million. For the 2-bed, that applies too. You pay your 5%, then you pay your annual rent if you're doing 1 year. So we have 1-year payment plan, we have 2 years payment plan, and we have 3 years. This is just for the 1-year payment plan because we can't put everything into one slide. So this is like a typical pricing for that is easy to sell, like easy to understand. But if you want to go for the 2 years plan, 3 years plan, or you want to do higher equity contribution, maybe 10%, up to 25%, you can reach out to us. We're going to give you a tailored payment plan. So what next? Affordable housing, we've been talking about that. Modupe gave us a wonderful definition. Esther gave us data. Boinde gave us moderated well and gave us good definition of this. So what next? There's going to be a form on this chat now. My colleague will post it on the chat. Fill the pre-qualification form. Everything we need is in that form. For if you are a business owner, your CAC document and every other thing will be in that form. Just upload the document. We will get it at the back end because today is Saturday. We can't give you an offer tomorrow. On Monday morning, you will get an offer from us. Our offer is very, very fast. We are a very efficient team. We got it in 24 hours. But like I said, tomorrow is Sunday, or you get it on Monday. Then start your journey to home ownership. Look at that picture. Look at that happy couple. Whether you're a man, woman, single, married, have children, you are welcome to own a home. So I hope you're clicking on that chat, on that link now, filling the form. We are expecting to hear from you. So if you have question on the pricing, have question on the apartment or this, please drop it in chat box. We're going to the question and answer now. Thank you.
Thank you for that piece, Glory. You have certain questions. Yes, I think some of your colleagues have been trying to answer some, but I want you to actually shed more light on it. So the first question, someone said, please can you shed more light on the active system and other means of ownership through rentals? I think the person is referring to the variants that you mentioned. Can you shed more light on the variants?
Okay, so for the variants, there's DOE active. So for the DOE, this variant, that means you are going through the mortgage route. We have partnership with a very known commercial bank. That means your equity will no longer be 5%. As seen here, the 1,876,299, you are paying 20% of 37 million or 59 million. Then that 20%, you are not paying it once. It will be spread over a period of 12 months. That's the DOE active. Or the 15 months. So that 20% will be spread over. So you're paying like maybe 300 and something thousand every month or 500 and something, depending on the one you're going for. That's the DOE variant. So at the end of that 18 months, you will have paid your 20% equity required to access mortgage. Then you get your mortgage, pay up your option sum, and pay your first year rent, and you become a homeowner, a proud one for that. At that, I hope that answers the question.
Thank you, Glory. So the next question that you have here is from, Benedita. She says, I love this idea. Is Marula Apartments made for investors who may want to rent their apartment, or are they for the average Nigerian, which means they are big enough to house an average family of 3? If investors are interested for a rental purpose, will Mixta rent it for them and at what cost? Thank you.
Okay, thank you very much for that question. Yes, as an investor, you can buy into 1 or 2 bedroom. Some of our clients are not even in the country. So in our offer to you, you will see some clauses in our agreement. You can sublet the apartment, but short let is not allowed. Let me mention that. You can sublet. You're not in the country, you can sublet. But Mixta, we won't promise you that we'll put tenants in the apartment. It's not in the agreement, but we can try our best. I need to reiterate that. We won't promise that we'll put people in the apartment. So as an investor, you can buy and start, even while still on your rent to own process, you can sublet the apartment and get rent. Ours is for you to remit your rental every year to us. I hope that answers the question. And at the end of the rental period, of course, the property will have appreciated. So as an investor, you have had return on investment on your property.
Okay. Thank you very much, Glory.
Any
you
other
have,
question,
okay,
please?
okay, I can see some hands are raised. Probably I would allow these 3 people to kind of ask their questions directly. Just 1 minute, please, so that I can confirm. Isaac, I'll be allowing Isaac to ask his question directly now. Please, 1 minute, Isaac. Could you go ahead, please, Isaac? I guess Isaac is not there.
Hello, good evening.
Okay, please go ahead.
Yes. So please, I want to ask whether is it possible for a civil servant to use 30% of his pension funds to engage in this buy and rent and own plan? Is it possible?
Okay, I think it's 25% for pensions.
Okay.
Can someone correct me if I'm wrong? I think it's 25%. Reach out to your RSA and they will give you the process on how to go about it.
Okay.
Yes,
Thank you, Isaac.
Yes, you can.
Thank you, Isaac. That was even the next question I was going to read, but I guess it is good I allowed you to talk directly. Okay.
Thank you very much.
Yes, you're welcome. The next person, Ituro, please go ahead to ask your questions, Ituro. Okay. Please go ahead, Ituro.
I don't have any question.
Oh,
Can you hear me?
Yes, I can. Yes, I can.
Yes, I can hear you.
Okay, that's fine then. Thank you. I saw your hand up, so that's why I called you. Also, the next person is Osasu. Sorry, I'm sorry I'm murdering your names. I really do apologize. Pardon me, please. Osas for short. Please go ahead with your question.
Thank you. I joined late, so I didn't catch your name, right? So I assume you're the moderator. You guys have been doing a very excellent job. So I heard you mention something about RSA, right? Entering through the RSA, as in getting a part of your RSA. Yeah, if I'm not mistaken, I think you're right. It should be varies between 20 to 30%, right? So what I want to find out, do you and you also said you have strong ties to a major Nigerian bank. Do you assist in that process if you want to assess part of your RSA?
Okay. Glory, we want to go ahead with that, please.
Hello. I was muted.
I didn't get the question. It was.
Yes, please. You can go. You can go ahead. You can.
Okay. What was the last thing you heard, so I can piggyback on it?
Can you start all over again? Sorry.
Okay, that's fine. So I was speaking about RSA, right? Assessing part of your contribution, taking part of your RSA, right? So I'm a bit familiar with how that process works, and I know from my last findings, right? I don't think I've seen any human that has been able to successfully assess that, right? At least this is as recent as maybe about 3 months ago. The process has been on, but in terms of disbursements, none that I'm aware of. So I know you mentioned you have strong ties with the Nigerian bank, right? So do you assist your clients to try to process that? That's my question 1, right? Then if someone goes the RSA route, which I assume is the NHF route, right? When it comes to your yearly annual rental, is it the same figure we are seeing here? Is it the same figure? I know you said that one varies a bit. It would be nice if using maybe the 2-bedroom analysis, it would be nice if one can get a range. Okay, if you're going the NHF route, where you need to pay 20%, I think you said you also have the window of either 12, 15, or 18 months to pay that, right? What will be the average annual rental fee? Yeah, thank you. That's my question.
Okay, Goinde, do you want to speak to that, or I should go ahead?
Oh, please go ahead. Go ahead.
Right. So let me start. Okay, let me start from where you stopped. The rental is fixed for the contract period. This rental is 1,595,000 for the 3 years rental, so it's not going to change. That's been said. Then talking about mortgage, not only NHF. So, for example, you can access mortgage through other PMIs, through other banks that are giving out home loan, or so it's not really it's not, how will I put it now? You are not tied to only NHF. You can explore other means. And for, I don't know if I'm getting I didn't miss anything out. We're talking about the DOE active, that's the 20%, and how it's been. Or can you rephrase that question? I didn't quite get that part.
Oh, can you still hear me?
Yeah, it's something you mentioned I didn't quite get. Can you hear me clearly?
So I think you've answered. So I'd asked if you go through the mortgage route, right?
Okay.
Where you have to do the 20% initially, what will be the yearly rental fee? And I think you've answered that, right? But what you've not succinctly spoken to is the, I hear you talking about NHF and other PMI mortgage options, right?
Wow,
But
I guess
everybody
his
knows.
network is bad.
Oh, is it my network? Is it better now? Is it better?
I can hear you clearly, Osas.
Okay.
I can hear you
Good.
clearly.
I can
Yes,
hear you as well. I can hear you.
I think it's
So I
Joey's
said,
network.
so I said, I know you mentioned there are other options, right? But
Yeah.
we all know NHF is like the most friendly,
Yes.
right? Because of the percentage, the length of payment, paying down, right, on the mortgage, right? So do you guys assist in assessing that, one, and also the RSA bits, trying to get part of your RSA? Do you also help in processing that?
Okay, so I'll just answer quickly. For the RSA bits, we have the partners basically. We have one first with one of the FIs, that's Access Bank. If you already have, or even if you were formerly using the ARM as your pension custodians or something, you could actually now their Access ARM. So yes, we could assist you in processing or in directing you to the right channel that would help you to utilize your RSA. Yes, that's one with the Access Bank. We also have partners with Stanbic in case you have Stanbic as your your pension managers. So yes, we'll just direct you to the persons you could speak with. For Access Bank, we might even take a step further to help you walk through how you would be able to utilize your portion of the pension, as we already are in the ecosystem with Access and Access Pensions. For the NHF, we have partners that we have a PMI that we are working with that we would direct you to. Mixter or Duo by Mixter would not help you to process the NHF, but we would help you, we'll just direct you to the partner that we are currently working with. And from time to time, we'll follow through on that particular process on how you've actually been able to access it, just for speed. We'll be working on back end just as silent partners, but we would not be helping you to process the NHF, the NHF process as the case may be. I think you asked the question around the payment of the NHF, if I can remember, or have I answered all the questions, Osas?
I think all the questions have been answered. Thank you so much.
Thank you so much. Thank you very much, Osas. Okay. Ifeanyi has asked the question just before. Oh, okay, it's the same. Okay, it's the same person. Yes, I can see your question now. Speaking to one of the products of Mixter Africa, that's the Adiva Playing Field 3. He said it has been marketed for 3 years and nothing has been done. Yes, this particular question has already been taken and forwarded to our group, that's the Mixter, because right now, yes, I know that the Adiva Playing Field was sold at a particular period, and I'm certain that at this particular, the end of this year, different things, different say activities have been moved to the site to actually commence. So yes, I think you wrote there is no facility as promised. Different okay. Oh, you can hear me. Okay. So different activities have gone back to site, and I'm sure there will be an update from your relationship manager about the Adiva playing field, because I'm aware that Adiva playing field is one of the products that have started receiving attention. We apologize about the delay, not 3 years as stated, not 3 years, but we apologize about the delay. You would bear with us that yes, the economy has taken a toll on construction and construction costs, which allowed for delay. But if there's anything that Mixta does, Mixta would always deliver your product and would always deliver it at a very, very, at a very, very valued asset, such that it will deliver with good infrastructure and good needs at the end of the day. Thank you. So I can see other questions. Okay, thank you. Thank you for your question. The link has now been shared with you for the buy, let, leave reports. I hope you're able to, just go through it. The other ones will be shared with you later on, or you could just follow them on their different platforms. They say, or email. Sorry, I can't pronounce them clearly. Okay. Other questions? Okay, just 1 minute. Thank you as well, Joseph. Thank you. Okay. Sam, thank you for your question. I would like a follow-up chat. There is a couple of people that I think would like to invest. Thank you very much for this, Sam. Yes. And just even to mention further, as Glory has mentioned, the rent-to-own scheme cuts across for everyone. People that want to be residents, people that want to be investors, or people that even want to serve as agents to push out to people that that will be interested in this. You can come in and use the rent-to-own scheme by accessing, say, the 3-year rental period, or even merging it with a mortgage scheme, just as was explained earlier. I can see another question. Information on this will be shared with you. I think one of our colleagues will reach out to you to get your contact details, Sam. Joseph says, given 3 years construction / delivery period, will the price remain same due to inflation or FX issues? Yes, so I'll give you a numeric example on how the rent-to-own scheme actually works. So assuming you key in today with the 5%, that's 1.9 for a 1-bedroom, or 3 million for a 2-bedroom, as earlier explained by my colleague Glory. You wait 18-month construction period. During that construction period, the price is fixed, everything is fixed. There is no interest accumulating on the particular outstanding. So what most of our clients currently do is, once they key in, they begin to pay different lump sums to reduce the outstanding balance. After 18 months of construction, the first rental year kicks in. You then pay your rental fee, and then there is a 15% interest that is accruing on the outstanding balance. This 15% interest takes into cognizance the time value of money. And yes, and even maybe the inflation and the FX issues that you've mentioned. But the good thing about the rent-to-own scheme is we're able to calculate how much you would be paying at the end of your 3 years rental period, assuming you don't even pay any lump sum at all, or assuming you pay different lump sums periodically. We are able to help you to calculate and walk through what the outstanding balance would be at any given point in time, and that amount would be fixed. So once we enter with you at an entry amount of, say, let me give you a numeric clear example. We enter with you at 2-bedroom for 60 million as displayed. You pay 5%, which is 3 million. The remaining outstanding balance will be 57 million. Assuming you do not pay any amount, any lump sum for that 18 months of construction, your outstanding balance of 57 million will be reduced by your rental value, which is approximately 1.6 million. Give or take, your outstanding then becomes 55 million at the end of at the beginning of the first year. There will be a 15% interest that will be added to that 55 million at the end of the first year, when you have to pay your second year rent. The second year rent will be used to reduce that balance. The interest of 15%, let's say in that particular year, it is 4 million approximately, just assumption. So 4 million plus the 55 million that was outstanding will be added, giving it 59 million. when you pay the 1.6 for the second year rent, it will then be used to reduce the 59 million, leaving your balance at 57. This is assuming a client does not pay any lump sum at all. But what most of our clients does is, what they do is they pay lump sums as much as possible during that construction period, so that the outstanding balance will be reduced and the interest that will be implicit on that outstanding balance would not be so significant. So basically, it's like a reducing balance method, payments method. Yes, I hope it answers your question clearly, Joseph. Thank you. Okay, thank you very much, everyone, for listening to our presentation. I can see that we've touched on everything. I'm displaying right now our information on how you could reach us for maybe further discussions. You could either send us an email or call us by the numbers that are on the screen. We look forward to actually hearing from you and answering as much questions as possible. Yes, thank you so much, Joseph, for that as well. So all right, it has come to the end of the webinar. Thank you for those that stayed with us, for all our audience that stayed with us to the end. We really appreciate you. Before the end of the next week, the video recording will be shared with each and every one of us, as well as brochures about the Duo Rent to Own scheme. It will be shared to us to see how we could actually continue with our interest in the Rent to Own scheme. Any last words from the Violet Leaf team? Esther Modupe?
All right. Thank you. It's been a wonderful moment with everyone here, and thank you for the invite once again. Don't forget to follow us, everyone, at Violet Leaf Officials on Instagram and every other social media platform, and also be on the lookout for our annual reports that will be talking about all what has happened and our market outlook for the year 2025 in the real estate industry. That will be coming out by December ending. Thank you, everyone.
Thank you. Thank you, everyone, and have a good day. Bye-bye.